Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 3rd of February 2019 and we're providing our gold and silver weekly update for the week ending the 1st of February. Last week we stated that this would be the last free weekly report and that we were going to add some visual technical analysis to this video. This won't be the case as we've been called upon unexpectedly to do an interview today, being Sunday. So next week will be the final free weekly update and we will show you in full what the new report will look like. Gold rose $15 last week from $1,303 to $1,318, having hit a high of $1,325 and a low of $1,297. In sterling terms, gold finished the week at £1,007. That's up £20. And in euros it closed at €1,151. That's up €9 on the week. Silver rose 15 cents, from $15.75 to $15.90, having hit a high of $16.18 and a low of $15.61. In sterling terms, it closed at £12.16. That's up 23 pence. And in euros, it closed at €13.88. That's up 0.08 euros. The gold to silver ratio rose slightly from 82.7 to 1 to 82.9 to 1. The Dow Jones closed on Friday at 25,063, up 64 points on the day and up 326 points on the week. And the Nasdaq closed at 7,263, down 17 points on the day, but up 99 points on the week. And the S&P 500 closed at 2,706, up 2 points on the day and up 42 points on the week. Brent crude rose $1.11 from 61.64 to 62.75. And US light crude rose $1.57 from 53.69 to 55.26. The dollar index stands at 95.57. That's down just 0.22 on the week. Gold markets initially opened a little down and then gradually built up some momentum and then rose some $10 on Wednesday and a further $5 on Thursday, falling back a little on Friday. The Fed's decision to hold interest rates at their current level, and Jerome Powell giving the clearest message we have probably ever seen by a central bank give, practically stating that interest rates are unlikely to be raised this year and that their equivalent of quantitative tightening, that is balance sheet runoff, may indeed be eased, causing gold prices to rise. He also highlighted that the Fed will use all tools in its armory should the economy turn south, giving to the markets a clear indication that, subject to data, QE could be on the cards should interest rate reductions fail to stem any possible downturn, and this in turn caused stock markets to rise also. We must not forget, however, that he has also given himself some wriggle room to raise rates either later in the year or next year by stating the Fed's actions will be, quote, data dependent, though most of us doubt that economic growth will be strong enough worldwide, in the near future at least, to enable that to happen. The jobs data published on Friday, showing the creation of 304,000 new jobs in January, against an anticipated 170,000, caused precious metal prices to pull back a little and took some of the euphoria out of the market, in addition to some mild profit-taking by traders. From a technical point of view, gold is seen to be supported at the 10-day moving average area of $1,300, with even stronger support at or around $1,265. 1325 is a resistance area, and this is where gold briefly touched, which was the high we predicted in our last week roundup and in a following video on the Fed. Generally, traders are expecting a slight fall in gold prices this coming week. But we have to balance that against the Chinese New Year and the normal consequent increase of buying during this period, unless of course it has already been acquired. Yes, the paper markets have more influence on the price, that is true. But fundamentals do also play a part and influence the paper traders' actions too. Whichever way we look at this market, we see strong resistance at 1325, very strong resistance at 1350, and cannot see any justification short of a war declaration for gold rising above $1,400 in the next quarter. On the downside, we can see gold possibly break below 1300, down to 1265. And frankly, we suspect, short of any drastic news, we shall probably witness a $100 consolidation period yet again, but this time between 1260 and 1360, for a month or two at least. Once again, and we are conscious we are repeating ourselves, the dollar index is key, and this should be watched closely. Silver markets were somewhat disappointing even to us. Now, long-term listeners will be aware we have never believed in the $30 an ounce story for silver for at least 5 years from the date our channel began. We're now even more confident that it isn't going to happen, and we're being slightly light-hearted here, as we heard David Morgan quote that figure in an interview the other day. And what happened when he did? Yes, you guessed it, silver went down. We actually respect David's knowledge, but whenever he attempts a pump, we are so tempted to short the market, which over the years would have proven so lucrative. Anyway, coming back to our disappointment. Last week we stated, quote, interestingly, if silver were to hit $16, we again could see it rise to $16.50 relatively quickly, end quote. But pointed out that the $16 level was highly resistive, giving the impression that we did not think silver would exceed that level particularly, though of course technically anything was possible. Well, apart from a slight dip on Monday, silver was on a continual rise during the week, peaking on Thursday at 16.18, at which level we thought it would just about push to 16.25 by the end of the week, then to aim for that 16.50 this coming week. But what happened? It fell back late on Thursday to 16.05, attempted a small rally on Friday, but when the jobs report came out, fell back below the highly resistive level of $16 and closed at 15.90. On the very few occasions we are bullish silver, we actually felt disappointed that it closed below $16 on Friday, not because it in any way affects our holdings, but as listeners know, we are really bullish silver for the very long term and are generally short-term bears or consolidators. And for once it would have been a little pleasing to see a little more strength in the market. Some technical analysts are predicting this pullback to be a consolidation before silver advances to $17, but again we suspect it may drift lower to 15.80 and possibly 15.40 before it attempts such a rally, and even then we're not totally convinced yet that $17 will be reached anytime soon. For if world economic growth is as benign as some are predicting, then this will have a negative impact on physical silver prices. So this has to be set off against any increase in demand for speculative currency hedging reasons. So let's see what's on the economic calendar of significance this coming week. Well, on Tuesday, we have Market Services PMI for January. On Wednesday, Trade Balance for November, and Productivity and Unit Labour Costs for Quarter 4 of 2018. On Thursday, consumer credit for December, and on Friday, wholesale inventories for December. So an interesting week, but compared to last week, relatively light. On the political front, perhaps the most encouraging news is that China's trade delegation stated that it made, quote, important progress, unquote, in the latest round of trade talks with the US. Whilst the meeting with Vice Premier Li He resulted in no final agreement, China did pledge to purchase significantly more soybeans from the US and to increase imports of US agricultural products generally, energy products, industrial manufactured goods and service products. And both sides are aiming for a formal deal by the 1st of March. This, if it happens, will prove positive for markets and the US dollar. However, during the week, we shall be publishing a number of videos highlighting some skepticism some banks and bankers have in the continuance of the stock market's recent rise, and also some of the new economic theories which are gaining some traction. Most, but not all of these will be published in the Inner Sanctum. Meanwhile, happy bargain hunting for our stacker community. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.